Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up. And it is Monday, the 23rd of January. We have snow on the ground in Chicago, not on the streets, but just on the grass. But it is 2023, 5:30 p.m. Central Time. My little kitty just walked down here, Ivy. So she's saying hello. Whenever we talk, she likes to sit here and work with me. So an interesting day, a strong day in the stock market. You had a couple of stocks go crazy. Wayfair won. I'll be covering it in the Spider ETF. It's worth covering. I haven't done that ever, so time to do it. Jumped 50% basically in 2 days, so quite a move out of it. You can see on the energies, they're just sort of hanging in right here. Bonds and notes, okay, you got to decide you even want to be bothered with them going into the FOMC meeting next week. We're in the blackout period, which means you're not going to hear any Fed members doing any talking at all to the press, colleges. There'll be no speeches. They're not going to do that. They're in the blackout period. In the metal markets, you tried to break the metals early on today. Silver's the one that got hit the hardest. The other metals held, and they came roaring back at the end of the day. On the S&P, you're staying over on a weekly basis, the 18-week average of closes. And as long as you do that, you have an upside bias in the market. Then when we go to the bar chart here, I pointed out that you seem to be caught between this high, this low, and you're in the roughly 60% retracement, 50% retracement area. The trend, however, is up. You've got a very clear pattern of higher lows and higher highs. That's bullish. The market has been fighting a battle recently at the 200-day moving average, and it fought this back here as well, and it's hard to tell if it's going to be able to hold it or not, especially with the fact that your Bollinger Band is right up here. And if we step back and we just look at what this market did today, let's see if I can get it. No, I'm not going to be able to. I don't know why, but it doesn't want to let me do it now. Higher high, higher low, and that's the zone of the resistance. Doesn't mean you can't go higher. Just be careful here, okay? This market keeps going up, yet the leading economic indicator report today came out even worse. 10 months in a row, it's been down. There's a lag factor. Generally speaking, you get a recession about a year later when this indicator stays down. We're 10 months into declines. I'm just giving you a warning. I know people are just rosemary happy with everything going on, and I'm not here to burst the party, and that's an uptrend on a chart. But it's also resistance area between the 200-day average and the upper Bollinger Band, and it is an overbought area. I'd let somebody else own it now. In the NASDAQ, overbought as well. The question is, can you develop an embedded reading this week? Right now, the trend is up. You have been fighting, present tense, between the green line, the 100-day average of closes, and the upper Bollinger Band. And they're widening that out. The pressure's been on the market to the upside. That's clear. You're nowhere in the Dow. You got a higher high, a lower low, and you're just back to the 18-day average. And what has been, I think technically speaking, the strongest of the charts has been the Russell, as you're on the verge of another bullish crossover with the 18-day average in red getting ready to cross the 200-day. It's not the ideal bullish setup. The ideal would be the red over the green and the green over the gray. You don't have it, the gray being the 200-day average, plus you're overbought. So we've had a nice run to the upside. It better keep getting bull news to be fed on, or bearish news they take its meaning, and that's what's been working here. They get the indicator showing the slowdown, and again, people are saying, oh, the Fed will never stay the course. They can't do that. We'll see. Got to keep your eye on inflation numbers. That's going to be important too this week. In the VIX, getting a rally back into the 18-day average. Once you hit that Bollinger Band, you rallied back up and you're hanging right there. In the March bonds, you've got higher lows, higher highs, but you are correcting an overbought condition right now. It could culminate with the market going back to the 18-day average. Right now, the trend is up, but you are overbought. Any reading with a number 7 in front of it here is overbought, and you have that on one of the legs. In the 10-year note, you had an embedded reading that you've lost. It often results in price and the closest moving average being the 18 coming together before a new high is made on the chart. In the dollar index, you're in a downtrend with what I've tried to teach you, the embedded reading. So many of you have taken the course, you get it, and you get the importance. So far, this market, in my opinion, each rally, like you're starting to get here, has been sold. The pros would come out, I believe, if you had a close over 21, you're nowhere near it, so they're still selling it short. The flip-flops happening in the euro. You don't want to be short the euro and long the dollar. You want to be one or the other because the weighting in the dollar index is 40% euro. But you've got the embedded reading, that's bullish, and a number of other markets are doing that. Look at the reading in the British pound, fully embedded reading. So what do I think the pros are doing on these breaks? They're buying it. I think right now they'll be buying the break here as the market, if it can come down, and they'll get out if the red line closes under 79. But until that happens, I think they're buying, looking for the Bollinger Band. There's a window envelope you also look for. Bitcoin has absolutely just latched on to this number. It broke out of the sideways action, and we talked about that. And it's gone now from roughly the 16,000 area back up if you wanted to pay $7,000 more at 23,000. It's been a very fast move. It latched on, and it's been in an uptrend this whole time. You just had another bullish condition. The 18-day average just got over the 100, did that now. When you're looking at the energies, the Brent versus WTI, got April versus April there. And as you can see, you have a market that is overbought, trying to embed. Embed means you need 3 days in a row where the red and the green are going sideways over 80 on a settlement basis. You're nowhere near that yet. You're not there yet. And here, you're overbought in an uptrend, but in rarefied air. You could drop back a little bit here. Don't be surprised by that. Then the heating oil, distillates. Look at how the averages are now starting to come together. You're liable to get a series of crossovers here. That could coincide with the turn there. I happen to think we've seen the lows in heating oil. We've seen the lows in gasoline and in crude oil. It will take some shock for the markets to get back through these old lows that they made here just in December. So that's what I'm expecting. And in the nat gas, I told traders there's a point where you don't want to chase the market. Let it give a correction to you. And you're losing the embedded reading in early trade tonight. I'm not in favor of selling short on this pattern that's come down this much. It needs a breather. Let it take place and then see what it can offer you is what I've been telling my paid subscribers. You got a freebie there. And again, I want to see you at the live meeting that we're having. Now, we have a live webinar. The webinar comes up the 1st. So let's see, I think it's, is it Wednesday or Thursday? I forgot myself. Thursday. It's Thursday, and it'll be 12:15 p.m. Central Time. That's when we'll all be together. Again, just move your cursor, click up here at any point. It'll take you in with that icon right where you have to go. I'm Ira Epstein. Have a good day.